afternoon, everybody. Welcome to your Friday edition of the TraderMerlin Show. Cheers. I will do a preemptive, I guess I can actually show the screen there. We're doing a trading week wrap-up today. It is July 1st, but I will not be doing a show on Monday, as I'm sure most of you assumed, which means cheers. Happy 4th of July, everybody. Hopefully everyone goes out and has a fantastic weekend with family and friends, does something good. And if you are drinking, make sure you take an Uber home. Don't need any casualties out there. So cheers, everybody. Let's get this show on the road after a nice... today is... what are we having? This is... Bibb and Tucker, 6-year bourbon. Oh, it's going to be so great to have such a nice long weekend. All right. Let's start things off with a quick shout out to everybody. Hello. Good to see some new names. TC, I did get your question. I'll answer that a little bit later on. But Giselle, we got Glenn, we got Michael, Randall, Zed. Good to see you, Zed. Gallo, Echo, Tom as well. Hey, Tom. My regular crew. Jill as well. We got Doug, Joe, the whole crew. Les, Skilled Stocksman. Anyway, good to see everybody. Glad to have my regulars with me. And if you are new, hit that subscribe button. It always helps out the show. If you have questions, email me at TraderMerlin@gmail.com or put them down below the YouTube video. Topic is, obviously, as we do on weekends, let's just drink some whiskey. But no, Trading Week wrap-up. Obviously, we did a lot of discussion yesterday about the economic data and the current status of the markets. I want to show what happened Friday because there's one particular chart that I really liked, and it's this one. It actually was your weakest performer on the day of our major indexes, so I thought that might be noteworthy for everybody. Love and life, Big Ib, where are you at? Are you traveling? You doing anything fun? Is anybody doing anything fun this weekend? Going somewhere? I will be staying local. Since you guys keep spurring me on, I will finish my outline for the second book that I want to do, which I'm really excited about, and hopefully make some progress on that one. Keep pushing me. I'll get it done and give you guys all the shout out for the peer pressure. This chart I mentioned, I really like this chart. You know, we were talking about gold. So gold on the day, up actually 0.07%, but just barely. But, you know, we talk about my favorite pattern out there in the financial markets to look for on a price chart. It is a hammer formation. That is my favorite thing to look for. That or a shooting star, right? I love those two formations. If you look here, look at the candle that formed today. This is a monster hammer formation. It comes after a pretty decent downtrend. What this also did, in my opinion, this is just speculation on my part, is this pulled in a lot of people who were bearish. Remember I said yesterday, if we get a close below 1800, you know, there's a potential shorting opportunity. And I said, if we do, and for anybody who thinks I might be making stuff up, as some other traders do, you can go check the archives. But I said, if we do get a break below 1800, you know, your next stop is going to be that 1785 mark, which is this low point going back to May 16th. Notice what happened. We broke below 1800, brought in more and more sellers as people going, oh crap, got to short this thing. And all of a sudden it hit right down to that, almost to the dead price of 1785, and then ripped up and closed right where it opened at. This is a very bullish sign. I'm kind of bummed that now the market's closed and we have to wait a couple days to get it to reopen. But what I will be doing is looking at this bad boy right here and saying, you know, if we get above 1810 when the market reopens, you might see this rip back to the upside here. So huge move. I'll check the volume here on the futures contract. Nothing out of the ordinary. It's not like, you know, climactic, but it is definitely higher than it has been over the past 4 or 5 days. So there you go. That was probably the most appealing chart, and some people have asked me, you know, what are your sort of things are you looking for your trades? This is exactly what I'm looking for, right? This is definitely going to be my number one thing to keep an eye on when the markets open back up next week. All right, that was number 7. Let's go and look at number 6, NASDAQ. On the day, really nothing that exciting, right? We had a range that fit completely within yesterday's trading range, so a little bit of calming, no real sense of direction. It was nice to see it finish rather strong, right? A lot of bullishness near the end. Here's your 5-minute, right? You had a pretty strong close on the NASDAQ 100, which, of course, going into a holiday weekend is a good thing, right? Everyone wants to go home a winner. So that was your NASDAQ. It was up 0.7, but at one point it was down significantly more than that. So nice to see it rebound. Here's your Dow Jones Industrial Average, which came in 5th place on the day to 31,047 is where it closed out right now, up 0.86%. Technically, really nothing to see here, although you'll notice the strength of the Dow was much better than the NASDAQ. Remember, the NASDAQ was almost like a Harami formation where everything fit in yesterday's trading room. Well, today we closed higher than we did on the previous session, so that's pretty good news for the Dow. S&P 500, which is up 0.99% as we speak right now. Same thing. It didn't break yesterday's lows, but it did break the highs of yesterday and close higher than that as well. So pretty good to see that one. Again, for anybody who's bullish, you want to see higher highs. Russell 2000, 1.23% gain. It was the most bullish of our three major indexes. As you can see, the distance here that it closed above yesterday's high was much more substantial. Anyway, closing in our last two, crude oil finally getting a little bit of a reprieve. This is almost a bullish Harami formation, up 2.45% right now. That number is going to tick back and forth as we do this show, but that's what we've got for crude oil. Technically, I look at it, I really don't have any strong opinions about where it's going to go based off price, but typically when you have a formation like this, it is a move back to the upside, and we'll have to see when the markets open back up. And finally, the dog that is Bitcoin, which will, in my mind, continue to decline, and I'll talk more about why that is going to happen. Liquidations, I think, is what you're going to see over the next few weeks, and more Bitcoin tanking. Again, I still stick by that 10,000 level. I'm actually seeing some ghost prints at 8,200, which really could potentially get there in the next couple months. So we'll have to wait and see what happens with Bitcoin. I'm holding off all purchases as we speak right now on Bitcoin and most other cryptos. I may buy one or two different projects, but small amounts, because I think we are in not only the crypto winter, but it could be a crypto ice age, which goes down for a little bit more. Hey, good to see you, Chris. Happy Friday, my friend. Okay. So that is that. Exited my QQQ puts this morning, Merlin. Thanks for the show yesterday. That led me to... You know what? I think so, Big Eb. And look, one thing I don't want to do is I don't want to sway anybody to do something that they don't want to do, right? Yesterday, I exited my puts, and I was happy with that. Today, I might have, on the NASDAQ one, made a little bit more if I kept it, but I'd rather go into the weekend knowing I made some profit. So I'm glad you took some money off the table. Good for you, right? You'll never go broke taking a profit. So now, Big Eb, what do we want? You and I both want this market to have a little bit of a rally. Maybe we see the S&P rally back up to this origin of this last huge drop. Maybe we get up to the 4,100 mark. I'll be shorting the hell out of it again if we get back up to 4,100. And hopefully, we rinse, wash, and repeat that cycle over and over again. Close my puts when it tanks aggressively. Buy more puts when it rallies aggressively. Done. Some ice to go with the whiskey. I've got a giant ice cube in here. I love the giant ice cubes are really one of my favorite things about drinking whiskey. I don't know why it is. I just like having that giant cube in there. Okay. There was so much other stuff I want to talk about, but let me dive right into listener questions. I've been slacking a little bit in that category. So for those of you who might be new, if you put your comments down below the YouTube video, I generally answer those first, which of course is what I will do today. Now, before I do that, let's real quick take a peek at the economic calendar that happened today. Most of the economic data was pretty ugly, but there's one number that to me is really ugly, and I think it's really not encouraging for the housing market. Construction spending in the summertime usually does rather well. That's when you and I do home improvements, maybe to flip our homes, but that's we got the warm weather. Let's do it. Well, the previous number was 0.8%. Expectations were 0.3%. We came out actually a contraction in construction spending, meaning negative 0.1. To me, that was probably the worst piece of data for the day. Again, we saw really good numbers for some other housing pieces, especially new home sales and pending home sales. But construction spending was really dismal, and I think that's going to have a toll on some companies like potentially Home Depot and Lowe's, which, of course, a lot of the retail home builders go to. So interesting to see that number came out today. And other than that, the rest of the world pretty much had fairly decent manufacturing numbers, and the U.S. was actually showing a bit of a decline with the ISM manufacturing PMI, and that has more people nervous about the markets going forward. All right, that's done. TC, who's with us today, good to see you, TC. He says, I have my trading money and I have my don't touch savings money, just sitting there doing nothing. Are I-bonds a safe place to put some don't touch money? Well, I guess it comes down to a matter of trust, right? Who do you trust? Would you rather buy some corporate bonds and maybe be making 8 or 9%, but that company could go under? Or would you rather buy government bonds and potentially be earning 9%? To answer your question, I would say if I had those two, a corporate bond versus a government bond, both paying 9%, I would always pick the government bond because the government is probably not going to go insolvent, right? I think down the road that might be another discussion where we default on our debt. However, 9.2 or 9.3% for I-bonds is very good. At least you're going to be coming close to beating inflation. And again, my feeling is that in the next 6 months or so, we'll see inflation numbers really decline sharply because of the commodities. We've talked about that. And the other part of this is, it's a little bit of a tangent here, TC, but it's in my head, so I got to throw it out there. If you guys are watching the news right now, let me see if I can do a poll. And it's kind of a vague poll, but let me see. Are most professionals and media bullish or bearish? Don't type it in yet. I'm going to give you guys a poll. So we'll go correct this stupid mistake I made, and we'll go bullish, and we will say bearish. Okay. Answer this question for me. I know we don't have a huge group. Most people probably taking off for the weekend. We got 58 people with this light showing today. That's okay. I put this poll out there for you. It says, are most professionals in the markets right now bullish or are they bearish, right? So as you read through the headlines, Yahoo Finance, Bloomberg, MSN, wherever you get your news, what is the general tone? I'm going to let that go for a little while, but to me, it's shifted. You go back 6 months and you had this optimism. Oh, it's a pullback. Markets are doing good. We're going to go to all-time highs. That was the rinse, wash, repeat. In my opinion, it seems like when I look at the news and open up any news property, they're all saying, Goldman Sachs is cautious. Elon Musk saying we got huge problems for the market. Jerome Powell saying, we might have some issues for our markets going forward. It seems to me like the vast majority of news is tanking and facing or saying that the market's going to go down in a big way. Because of that, I can't believe I'm even saying this, I'm starting to shift my bias to be bullish on the market. I know, don't shoot the messenger, guys. The only reason I say that is when, in my experience, having done this a long time, when the scales get tipped totally to one side and everyone's overtly bullish, that's when markets do a surprise tank. When they're overtly bearish, that's when the markets do a surprise rally. So I'm looking at the charts right now. I'm not seeing any indication we're going to get one. But I kind of expect there to be, in the next month or so, a really solid rally up. So just something to consider there. So let me see what was the result of the poll. I'll finalize this one. 78% of you saying bearish, 22% of you saying bullish. No, I would agree with that. So, if everyone's thinking bearish, might want to think of potentially the opposite direction once the market proves to you. All right. Put don't touch money in Doge. You will never touch it again. That's a good one, Daniel. TC, don't put your money in Dogecoin. Yes, I would say put your money in I-bonds. You can only do 10,000, so you have that limitation there. But why not? If it's just going to sit there, as Big Eb says, it's tied to inflation. Now, there's a rebalancing. So you might get a period of time where it's not exactly the same as inflation. Inflation might move up. Then all of a sudden, you'll see the I-bonds reset and move up as well. But if inflation really tanks, well, you're loving it because you'll be earning actually greater than inflation. So it's a good place to be. Question, are you okay to shift? What is the best contrarian indicator? To me, it's not necessarily a contrarian indicator. I would say the social aspect is what the contrarian indicator is, right? What's the old phrase that everyone gives Warren Buffett credit for, which I don't believe is actually his? When there's blood in the streets, that's when I want to be buying. It's kind of that same situation right now. The talk track, the sound of it from the media makes it sound like there's blood in the streets. Now, I still think we have some downside move to go, but expect when everybody gets bearish, you're going to have some big market rallies to wash them all out and get them long again so they can yank that market back down even further. And I think the inflation data could be something that spurs that market move to the upside. Good example today. Let's see, what else do I got? So we should be bullish. I don't know if we should be bullish, Big Ev. I'm saying in my mind, I'm expecting there to be a pretty significant rally. The more bearish that people become, I'll expect there to be a big pop. Now, again, we looked at the commodity markets over the past couple of days on this program, and if we see those prices continue to drop, hell, let's look at commodities today. You were thinking maybe Merlin's exaggerating or dramatizing this a little bit much. Look, here's wheat again, down another 4% today. You had soybeans down 3.25% today, a big drop. You had corn down another 1.4%. You had cotton down 1. It's still just dropping and now. Granted, we did have lumber pop 5%. Lumber looks like it's reversing this downtrend that it's been in for quite some time. Real strong moves over the past couple of days. Natural gas, even though you're up 3.6%, that chart is screaming that it wants to have a little bit of a pullback and continue this downtrend. So I think that these numbers are going to hit the data in a few months, not right now, and then all of a sudden everyone will change their tune. But I definitely expect there to be a market bounce at some point. Overall, I still am bearish, but I just can't help but to feel contrarian at this point, simply because everyone is so bearish. All right. What'd you say they're big about I-bonds? You had a comment there. There it is. Problem with I-bonds is it can only buy 10,000 per year. Correct, right. But still got to own. And if you have 10,000 sitting there, I would say go for it. It's not risk-free, but it's pretty much risk-free if it's a government bond. I heard GPU prices were starting to go down from everyone selling their crypto mining rigs significantly, right? You're seeing significant declines in GPU prices. You look at something like NVIDIA. Right, NVIDIA has been on an aggressive sell-off here, right? And you're probably thinking, well, NVIDIA is going to be doing great. Remember, NVIDIA is one making lots of these GPU video processing cards. So, I ran some numbers in the Crypto Investor Live program the other day, which really make me think I may actually look into doing some mining. As these mining rigs get real cheap, I'll buy them on the cheap and set up a little spot here and do some mining in my house. I'll let you know how that goes. But that's a ways down the road before I actually get there. Yes, TC, I-bonds are tied to inflation. Sorry, I'm backwards on the chat here. So Chase R says 3,500 on SPX. I don't know, I have SPX on here. I usually don't keep the indexes on there, but there you go. You see this blue line I've got. I mean, that's pretty much the next major logical stopping point. I will set this to exactly 3,500 just so we can get those numbers proper for you. And to me, I actually think it's going to be a little bit higher than that. I would think it's going to get to right around 3,550. But yes, that is where I do believe it's going to be going. I think that's where we're headed. I think that's where it's going. I don't know if it's going to happen next week or the week after, but there's no arguing this trend. The trend is your friend until the bend at the end. You guys probably hate me for that stupid phrase, but that's what it is. Period. Keep it simple. Yeah, Micron did lower their forecast, and Micron made some really negative comments about the semiconductor industry, and this is part of the reason you're seeing a lot of semis tank. However, we've already seen a pretty significant decline in the semiconductor index. And if you notice, we have a hammer formation on this one as well today, which makes me, I like that. Not only do you have a hammer formation, but you have it with climactic volume. It's one of the highest spikes of volume on the screen, over double normal, and it's on a hammer formation. This is one to watch on Tuesday when markets open back up. Keep your eye on Micron for a bullish bounce. Let's drop that line down there right to the top, just so we can all get an understanding of what that might be. Let's see. You want to make sure this is locked in, snapped onto there. So you get above 54 bucks. If we open below $54 on Micron and start to rally above that, you might have a great start off as a day trade and could actually turn into a much longer term trade if it does run. Milagro. Oh boy. So I think I've told you guys, I know I talked about it in my CIL. I moved over a ton of crypto to Voyager, and I have been aggressively trying to pull that out. Every 24 hours, I'm trying to pull out another $10,000 worth, and they froze accounts. Just blows my mind. But anyway, it is what it is. Yes, they froze their accounts, withdrawal interest. I did not get all my money out, Milagro. I got a good chunk of it, but there's still probably 25,000 worth of Bitcoin, Litecoin, and some Ethereum sitting there. But I managed to get out, I think, 51 Ethereum, so I'm pretty happy to get that out. But yeah, it was funny because I knew it was coming, and I was just like, every 24 hours, like, take another 10 grand out. And as of today, they said halting all withdrawals and transactions on Voyager. So you've got BlockFi dead in the water, Celsius dead in the water, Voyager dead in the water, Nexo doing okay, but they're Switzerland. And what was the other one? Crypto.com. You got to ask yourself, what about Crypto.com? Crypto.com could have some issues going forward as well. Principal money should be protected with I-bonds. Yeah, it's a government bond, so you don't necessarily have to worry about default. The government's not going to default. I guess the odds of a government defaulting are much, much smaller than any company defaulting. They just print more money. So, not saying you're totally safe there, but I would argue that it's probably just as safe as putting in a CD. Instead of taking a deposit, you got government bond, I would say you'd be okay there. Hey, congrats, Lori. I'm very happy you got your money out. Bravo. I know there's some people who didn't, and unfortunately I got screwed on Celsius and on Voyager, so I will drink to spilt milk, if you will. Definitely, that's not a chunk of change I wanted to lose, but it looks like it's going to happen. Chase, for those of you guys who don't know Sam Bankman-Fried, You might want to check this guy out. It's really just kind of a bizarre story on who he is and how he got to where he is. To me, he's got some issues. However, he's making some brilliant plays in the crypto world, and I kind of well, he's certainly not the rich. You said will be rich the next bull move. Yeah, he's already a billionaire. He's a multi-billionaire. The question is, does it get to the point where Sam Bankman-Fried, who is the guy who started FTX exchange, at what point does he become the richest guy in the world? Could it happen? Absolutely. He's got FTX. He's now got stakes in, I believe, BlockFi, some Celsius. He's maybe potentially going to be buying Robinhood. He's creating this financial juggernaut, which going down the road, we'll see how that all pans out. But yeah, very interesting watching what Sam Bankman-Fried is doing. Did you hear about the Dallas Cowboys' own big bet on natural gas? I did not hear about the Dallas Cowboys. I'm a Niners fan. Cowboys suck, right? They're our rival. I'm kidding. I did not see that one. I'll have to dig into that one. Let's see. Why does the SEC continue to block the Bitcoin ETF? You know, Joe, right now I think that their concern is they don't want the public to have access to Bitcoin right now. I'm also hearing rumors that the Fed is behind this recent sell-off in crypto. They're trying to make it look bad so that people don't use Bitcoin. I think that's a bit far-fetched. Remember, it came out of nowhere. It will probably continue to be there, meaning Bitcoin going forward. So the concern is the volatility of it. I don't see the big difference between having GBTC, which is a trust, and actually owns Bitcoin, or actually having a Bitcoin ETF. So to me, it seems like stupidity on the part of the SEC. However, you may have seen that Grayscale, who has several different cryptocurrency trusts, is now suing the SEC. Pretty dumb move in my opinion. I think that's a pretty stupid thing to do. If you're trying to get a specific agency to open the doors for you to come out with a new product and you're suing them because they won't let you, do you think they're going to be, open-minded now and encouraged to help you through with that product? No. As a matter of fact, I think they're going to put you on the back burner. If someone comes in with the exact same request, yours just went to the back of the line, and I might entertain this new one because they're not suing me. Kind of a screw you kind of moment. So I thought that was kind of crazy for them to sue the FTC. Yeah, you got, sorry, Milagro. Unfortunately, it's learning pains that I had to go through personally and some others as well. But I'm glad that I got some money off of it. The only one I haven't pulled off of is Nexo, and I may actually just pull everything to cold storage. I'm trying to move most of it to cold storage. All right, let me finish the show before I finish this whiskey. All right, that was one question came through. Now, there was a question I could not answer, but I will do my best. Thanks, DC. I've ruined a lot of friendships with my blatant honesty and bluntness, so hopefully I don't offend anybody here with it. So NJ, who is probably here with us today, he says 2-year and 10-year yields are going down as the Fed raises interest rates. Actually, it's kind of the opposite. As they raise rates, the yields are going up on both those instruments. We've seen them both rise. He says, after Powell joked of raising 75 basis points and then made it happen, when are things really broken, besides the inversion movement of the 2 and the 10? So I guess, what's your definition of broken? And I would argue right now that our system is broken. I would contend personally that we are in a recession as we speak. I think that we are in a recession from just a pure data perspective. Now, does that mean that this is all going to go to hell in a handbasket and we're all going to be sitting out on the street corners begging for food? No. There are magnitudes to these things, right? We can still go into a depression and most of us will still be doing okay. There might be some who are struggling immensely because of that, and to me that is because they didn't put themselves in a position to weather a storm, right? You should always be able to weather a financial storm. That's just personal finance 101, in my opinion. Of course, some people might be hit more significantly by any sort of depression or unemployment and things like that. Now, to your point, let me first talk about that 2 and the 10 year. This is something I actually have an indicator here in TradingView where I look at this one regularly. And here it is. Here's the 2 and the 10 year. And this is the difference between the 2 and the 10. It takes the 10 year, subtracts the 2, and that's the difference. If the 2 is above the 10 year, this would be negative. And notice they're almost the same. We have a very, very flat line between the 10 and the 2, but it's not inverted right now. It almost was a couple weeks ago. Now, why is this important? Well, it's just a psychological thing in my opinion. If the 2 year obviously is paying you more yield than the 10 year, then why would you buy a 10 year? Right? Just go with the 2 and call it a day. That basically stifles long-term investment. So I definitely keep an eye on this, and this is one of the main benchmarks for, are we in a recession? What is a qualification of a depression? Well, obviously that's the magnitude at which we see declines. Is it a slow sloping down? They'll call that a recession. And also the duration, how long it lasts. If it's an extended period of time, which, what's the time frame? There is no real framework that says, oh, it's after a year. Well, now it's a depression, right? From everything that I've learned, it's really about how quickly the data is changing. So right now, all eyes, at least for me, all of my eyes, are going to be focused on next Friday. Next Friday, we have a whole bunch of unemployment data. Actually, it's Wednesday, Thursday, and Friday for the U.S. But the Friday unemployment number is really important because, in my opinion, the last shoe to drop here is unemployment, right? Remember, a stagflation environment, which is where the markets would really be broken, is where you have high inflation, high unemployment, and what's the third one? Man, my brain is so full. I've been talking all day, so I forgot all my talking points. You have high inflation, you have declining GDP, and you have rising unemployment. Right now, we have, as we talked about yesterday, high inflation, we have declining GDP, so you have two of those three, but unemployment is staying fine. It's actually trending down. However, if we start to see that unemployment data on Friday tick up and go from 3.6 to, let's say, 3.7 or 3.8, then all of a sudden the entire talk track is going to go, stagflation? Right? And people just kind of go, uh-oh, here we go. That could be one of those pieces that would cause it to drop more aggressively and push us maybe into a depression where the economic data starts to fall faster. I didn't have a chance to bring these graphics up, but I found some really cool pictures here. Let me show you these ones. Don't worry, they're not nudies. We're good. Here is, check this out. This is a graphic that I found that shows layoffs. And I think this one's very interesting. Here you go. I know it's hard to see, so let me blast this one up a little bit. These are the layoffs that have been going on in the U.S. since late 2021 and early 2000. So there aren't a lot of big names. Zillow did some big layoffs last November, but you can see Booking did some layoffs in February. You've got Betterment, you've got Troll, you've got GoPuff. These aren't like household names, but it starts to turn into household names here, right? You can see you've got Coinbase, you've got Compass, you've got Ralph's, you've got Tesla doing huge rounds of layoffs, Kazoo, Bybit, International Business Machines. The layoff numbers are surging. Now, it's only 19,000. These aren't like, oh my goodness, catastrophic layoffs. But what's interesting is there really were no layoffs going on in 2021, and all of a sudden we're seeing a surge there. Now, why is that important? Because this is a trend, is it not? If we start to see these layoffs spiking, that means that unemployment number is going to start to grow and grow and grow. And again, it's all this giant, all the cogs of the wheel are all causing some action one way or another. Of all those people that got laid off, let's just take Tesla, for example. I don't know how many they laid off, but let's say they laid off, I'm making the number up, don't hate, I just say 5,000 people. That's 5,000 people that went from probably six-figure checks at Tesla to now all of a sudden collecting unemployment, making a couple $100 a week. What does that do for consumption? That's not a huge dent for the economy. But if that turns from 5,000 to 50,000, that's a big dent for whatever economy or geographical location those people live in, right? If they all live in that new city in Texas where they built the stations or built the factory, they laid off 5,000, consumption, that whole city is going to start to decline, which means they'll start doing more layoffs. And then the cycle just gets worse and worse. So to me, I'm very interested to see, I think the biggest variable for our markets right now is not actually inflation. I think it's going to be the jobs because inflation is, everyone's eyes are on it. We see it. I think that they've kind of ignored the unemployment data, and now I think that the chickens are going to come home to roost again with this unemployment stuff. So that's just my 2 cents. I think this might cause the next little panic mode. And again, I've got positive pieces for the market, and I've got negative pieces for the market. Bad for consumer confidence also. Yeah. I've told you guys, my attitude is I'm not spending. I'm trying to spend as little as possible right now because I want my net outflows of capital from my accounts to be minimal, which means I'm going to be saving more and more and more. Now, I might buy some things along the way, but they're things I really need. I have to separate those needs from my wants and say, well, the wants, we'll just put those over here. I don't need those right now. I'd rather have capital. I'd rather have a lot of money. So if and when things go to hell in a handbasket, I can buy on the cheap, whether that's Bitcoin or houses or equities or whatever. I want to have some capital there. Unfortunately, what happens all too often is when we have a cycle that looks like this. Let me go to the S&P 500 here, and we'll go to a monthly, right? When you have a cycle that looks like this, right, and you have this big drop, people are just spending like normal, So they're spending normally. They might be losing their jobs, and they're still spending normally, and now they're using credit cards. And by the time the market gets towards the bottom, they're going, I have no money to buy anything. I can't even go get a loan to buy equities or stocks or Bitcoin or whatever, which you probably don't want to do anyway. But the point is there's no money from the retail people. My goal is that when this thing drops, I want to have loaded guns full of capital so I can say I'm loading up. I've made that mistake back here in 2000. That was a big mistake of mine, and I learned from it, which was I just held. I lost a lot of money in this downward market in 2000 to 2003. I did not make that mistake in 2008. It was one of my better trading years, all right? Because I saw this, I shorted it, great. Had a lot of capital near the bottom. But I think most people, as I've said before, have massive paper profits. This is the biggest bull market we've ever seen. And now people are like, oh, it's all great, it's fantastic, I'm rich. No, you're not. You've got paper profits. And since you have paper profits, and you notice that the decline here, you have lost roughly 20% of your account value. If you're leveraged, even more. Buying all the dips is really bad. Yeah, don't buy all the dips. You have to be selective. And I guess it depends on your time horizon, right? Again, with my Bitcoin trades, it's years away. I don't care. I'm fine dollar cost averaging, but I do think it's going lower, so I'll wait. But if you're, buying these little pullbacks in Nvidia, Apple, Tesla, still expect some pain, right? But in the long haul, you'll probably do okay. I mean, I was talking to a friend of mine today who's in Amazon, or purchased some Amazon today. Look, Amazon is arguably one of the biggest, most influential companies in the world. Off of its peak that we saw back here in July of 2021, it's currently down 42%. I would contend that that's probably a long-term great buy. That said, could Amazon drop even further? Could we see it get down here to 115, which would be a decline of 61%? Sure. If we continue to go through a bear market and we see more layoffs and more people out of work, yeah. But long-term, I guess it's all what's your time horizon, right? What's your time horizon? Isn't it classic that not all, but most Americans spend more than they make? Yes. Yep. It's funny. One of the cornerstones, actually, there's a formula. The second book that I want to write, which that's what I'm going to put all my attention on, is simply a formula for that. And it's my firm belief that the vast majority of people don't exactly know how much you spend each month. You have an idea, but you're not actually looking at every month and saying, this is exactly what I spend down to the penny. This is how much exactly I have coming in from all my income sources. And here's all my liabilities, my rent, my debt obligations, my mortgages, my credit cards. And it's a simple formula. If the result of that equation is a negative number, you will never get out of debt and you will never grow your net worth. But if you are positive in that equation, now you have the potential to take those extra proceeds, allocate those appropriately, and hopefully grow that capital. So yes, I do believe that the statistics are that most Americans are spending more than they make. And that is obviously a recipe for disaster. All right, let's see. Isn't Tesla layoffs? EV competitors are hiring. It would be good to see hiring chart similar to layoff chart. Good point, Tom. I don't know where those other Tesla employees are going. I don't know, but I just see the layoffs coming, and I'm hearing more and more that companies are starting to ramp up layoffs, which would make sense because they've been on a hiring spree for quite some time now. All right, let me go back to the charts here and or my questions. So hopefully, NJ, hopefully I answered that one for you. Garrison, you asked this one, and I'm not a financial advisor, so I can't tell you to buy Tesla at $640, but I can certainly look at a chart, and we can all make an opinion. Let's go TSLA. What time is it? I don't want Big Eb to have the joy of an hour show today. We got 25 minutes. I think you guys remember, some of you might remember, this show was supposed to be 30 minutes. I don't think I've ever actually done a 30-minute show for TraderMerlin. That was the initial goal, was a 30-minute show, and I don't think I have ever done a 30-minute show. I think the shortest one I've done was like 38 minutes. Under-deliver, or under-promise, over-deliver, is that what it is? Let's see. As I continue. All right, let me go to Tesla's chart here. This is the monthly, so let's go back to, I like to start things at a daily. I know some people like the weekly, but I just like to see kind of what the zigs and zags are of a specific security. So let's just start, and normally I would just come right out and say, Garrison, here's what my thoughts are on it. But let's look at the price chart first. If you look here, we could argue that this was in a pretty aggressive uptrend, which is now broken, right? That red trend line, it's done and over with. Now, I don't care where you draw the trend line from now, it's pretty clear to me that we are in a downtrend, right? You could walk through those tops right there. You could go from over here and look at the most current. Oh, come on. Zoom in a little bit. Let's go to the most recent downtrend, which is from there through there. You know, we still are trending aggressively down, regardless of how you draw your trend lines. So I would contend we are in a bearish cycle for Tesla. No matter what I think about the company and my admiration for Elon Musk and what he does, other than some of his recent political views, you know, you look at this price pattern right here, it's not quite a pennant formation, but you do see we're making slightly higher lows, lower highs. Now, why is that important? Because there's a specific formation, and this is a loose interpretation, that's called a bullish or bearish flag formation. And some would argue that this is actually a bearish flag and the expectations are price going to move to the downside. Well, look, you can draw the lines on it that you want. Bottom line, in my opinion, is what does it look like right now? And it would be very simple to put a line across these lows that we saw established on May 24th and 25th. Put a line across, let's say 224. If it gets down below 224, then might have some shorting opportunity in it. So buying, well, you're very risky buying at 240. 640. Here's your line that you had, Garrison. Could you buy right there at 640? Sure, absolutely. You know, why not? The issue I have is if you bought at 640 and it drops below, let's say 620, you better get out. So your stop loss at this point is going to be at least 20 bucks, right? So I personally don't know if I would be buying Tesla. I think that you are still going to see negative downside move here in markets for a little bit, even though I do expect there to be a kind of a black swan rally here to freak everybody out. But the trend is down. So short the rallies. I would be more of a seller than I would be a buyer of Tesla, even long term. Now, where would I be a long-term buyer of Tesla? If Tesla gets down to 400, I'm in. I'll finally bite the bullet and buy Tesla. I think the only thing I've ever done is buy puts on Tesla after an earnings a while back. I would actually be interested in owning Tesla at 400 bucks. But we'll have to wait and see if it gets there. Maybe I'll be selling maybe I'll sell some puts against that and collect some premium down at 400. I'd be fine with that. But there you go. I'm not a big fan of buying Tesla right now. I still think that there's overhead market weight that could continue to bring things down. All right. And, you know, as happens here occasionally, you guys ask me some questions I just simply don't know the answers to. And then I usually go back through and look and see if I can figure out what those answers are. But this is one that I don't know the answer to. So I apologize for John, but I do want to give you some props because you sent in the question. You posted under the YouTube video. John says SPX and NDX. Okay, so remember SPX and NDX are indexes. SPX and NDX options trade until 4:15 Eastern Time. But on most days, the indices themselves stop changing price at 4 p.m. Candles are printed out to 4:15, but they don't change price after regular market hours. Usually, on a handful of days, though, price does change after 4 p.m. On 6/27, NDX price changed between 4 p.m. and 4:10 p.m. On June 30th, SPX price changed until 4:05. My question is, why does the index price sometimes change after 4 p.m., but on most days it doesn't? I got to be honest, I don't know. For me, an index it's that window from opening hours to closing hours. So if you're using East Coast, 9:30 to 4 p.m. After that, there should be no more changes to it. The only thing that I can think of is there were some latent prints that came through, and it actually ended up causing it to register as the closing price, which dropped it down a little bit. It's the only thing I can think of because the index, like you said, isn't trading after those regular market hours. At least not that's being recorded. So, for example, if you look at something like Apple, there is a last official trade for Apple, right? It happens right at 3:59 and 59 seconds. The last trade that happens, boom, that's it. That's your closing price. But as soon as 4 o'clock comes around, markets close, it still moves. And why is that? It's after hours trading. I don't know about after hours trading on indexes, SPX and NDX to be specific, because I have not done that. So I'm not exactly sure. I'm kind of curious as to why that would be. If you, might be a good question to ask your broker, because maybe they're meddling with prices on you. I don't know. I mean, I'm definitely one of those non-trusting people in the financial markets, but I would maybe ask that question of your broker. Say, wait a minute. this index is not supposed to trade after 4, but it changed. It traded after 4 p.m. and it messed up my option trade I had with you guys. Was that orchestrated by you on the back end? It may have been. So I would actually ask your broker, John. Unfortunately, I don't know the answer to that one. I apologize. I wish I could give you more insight to that one, but I don't trade. I don't trade the index futures like that. I don't trade SPX or NDX. Haven't done it. Maybe in the future. Let's see. Let me get one more question out of the way. Let's see how much time we got. Plenty of time. So this is a great question from Adam. I think, Adam, you might be with us today. I recently begun reading more on the subject of trading psychology. One book I finished reading was Mark Douglas's Trading in the Zone. Yeah. It's Mark Douglas, Trading in the Zone. And then the other one is Dr. Alexander Elder. So those two are kind of the kings of trading psychology. So Mark Douglas and Alexander Elder. I think one's called Come Into My Trading Room. But Trading in the Zone, The Disciplined Trader by Mark Douglas. I thought that Trading in the Zone was actually Alexander Elder, but not quite sure. One that I really liked was Come Into My Trading Room, Trading the Zone, and The Disciplined Trader. Those are all great books. And anybody who is trading, you should be reading books on psychology, or at least working with someone on psychology. I think many of you have seen that I put a lot of emphasis on psychology, behavioral analysis, not just of myself, but even understanding how the market is operating. We can have an opinion about what a price chart might be telling us, right? We can look at these charts all day long and go, oh, I see some consolidation here and demand zones. But why? Why is this price looking like this? It's all psychology. It's behavior of buyers and sellers, period. So I definitely am a fan. I really have only read a couple books on. Yeah. Thanks, Big M. My first one that I wrote was really just a compilation of stories from my years of trading, which are all kind of fun, but I just haven't finished it. I don't. You know what it is? Part of me just thinks I'm going to go out and spend all this time and no one's going to read it, or I'll be embarrassed about the book. I don't know. It's just stupid reasons I make up for not finishing that book. So there you go, Adam. I would say really anything by Mark Douglas and Dr. Alexander Elder, and also Dr. Woody Johnson. Now, Dr. Woody Johnson is, I would say, is personally, I think, a bit more technical. He really has formulas that help you understand how can I take this formula and apply it to a situation, right? Like my favorite one he has is T plus E plus B equals R. If I got a tattoo, might actually get that one. T plus E plus B equals R. Thoughts plus your emotions plus your behavior equals results. And if you're not getting the results that you need, you have to change one of those three factors. You have to change your thoughts, your emotions, or your behavior, period. And I firmly agree that that is the success for people in trading. It's not that you have a supply and demand methodology or trading moving average crossovers, etc. You are trying to deal with your own personal brain and how you filter information, how you apply information, how you react to information. And that's all psychology. I didn't believe this until I really got active in trading. And then I got in a discussion with a couple other traders and I started digging into it. And kind of the industry accepted number is 80 to 90% of trading is psychology. That should tell you a lot right there. So anyway, Adam, read those books from Mark Douglas, Dr. Alexander Elder. I can see that we have other recommendations coming through the room right now. So where'd that one go? Dr. Brett Steenbarger, never heard that one. Trading Psychology from Lisa says likes that one. I heard that your favorite book was The Art of the Deal. I actually read The Art of the Deal. It's funny because I came down to Southern California in 1998 and I had an Alexander Elder book, a Mark Douglas book, Reminiscence of a Stock Operator, and somebody gave me The Art of the Deal. And well, it was an interesting book. It was an interesting book, but I don't know. You can just whatever. I'll leave my disapproval for an individual out of it. But yeah, Art of the Deal probably wouldn't make my top 10 list of books. Let's see. Tom, Tesla is facing competition, not delivering on promised vehicles, and has some vehicles not updated in 10 years. Tesla should go down to GM, Toyota levels of evaluation. You know, I personally think it's starting to lose a little bit of its Apple-type cult following, right? It was just running on vapors, and everyone's just saying this is the greatest company in the world. However, you know, if you look at some of the things he's doing, I think it still has some upside potential, but I think it's due for a bigger correction. I agree with you, Tom. I think that at some point it's going to continue to drift down and come down to levels where I'd be happy owning it long term. Right now, if I look at that Tesla chart, I'm just not content owning it at these levels. I'd only have 100% potential rate of return if it went up to its all-time highs. But I think you can get more downside move here. You notice a lot of electric vehicle companies are really struggling right now, and not that Tesla should be in the same category as these ones like Lucid, right? Tesla is head and shoulders above them, above Lucid, above NIO, right? But they're all taking a pretty big hit right now. And I expect that to kind of continue for most things. And everything works until it doesn't. Everything trends down until it doesn't. TC says 99% is more like it. You're right, brother. I'll tell you, there's some days where I feel like it is 100% psychology. Seriously, 100% psychology. Okay. And that was. I went through all the questions I had for today. Can't wait for the Tesla phone to come out. Are they coming out with the Tesla phone? So there's a crypto project called Solana, which it's a layer 1 blockchain that is really designed to do smart contracts really quick and inexpensively, but it crashes all the time. And so they're actually coming out with a phone, and it's kind of funny because everybody's talking about hope their phone doesn't break as often as their network does. Ouch. Too soon? Echo, you said the war of art. I think you mean by the art of war? I think. Unless that's actually what you meant. I haven't read The War of Art. I've definitely read The Art of War. However, if you look at the book, The Art of War, I think that what makes that one special is it's not about trading, right? The book, The Art of War by Sun Tzu, which you can find tons of versions online for free. Just type in artofwar.pdf. There's tons of different versions. What makes that book so special is it is a manual on combat, whether that's trading, whether that's a personal dispute with a significant other, with business partners. I mean, you learn how to navigate personal issues. And I personally think that's probably one of the best trading books out there. All right. Luce Elise hasn't lost 2 technicians to a failed test yet. Ooh, gosh. I don't know about the the technicians being lost. All right, I'm going to wrap things up here unless you guys have any last-minute questions for me. I'll give you a sec to send some in. Now, as far as Monday goes, as you know, it's 4th of July, so I'm sure most of you are out doing something, hopefully barbecuing something up. If you're vegetarian, have some barbecued portobellas. We go out there and enjoy the sunshine or just a nice day off. You should have a nice 3-day weekend for most people. As far as economic announcements on Monday, there really isn't anything noteworthy. And same thing for earnings. There are a ton of earnings on Monday, but they're all international companies that are being reported, probably not impacting your portfolio. So it all boils down to Tuesday. Now, we'll talk more about, on our Tuesday show, what's coming out this week. But just know that it's a very big week because you have huge unemployment data. 4 announcements coming out for the U.S. You have one coming out for the Swiss franc. You have one coming out for Australia. You have one coming out for Canada. And you have also a rate announcement for Australia that's expecting a 50 basis point increase. So it's going to be a very wild week because volume should be low, at least on Tuesday, as most traders might be taking another day off, making it a 4-day weekend. But anyway, thank you for sending in those questions. TC, Adam as well. We got John sending in questions, Garrison, NJ. We do appreciate you sending those questions. If you have some, send them or put them down below the YouTube video. That's the easiest way to get questions over to me. And I put them right in the PowerPoint slides here so I can get them all answered on the show. And then if you have anything else you want to discuss, send it to TraderMerlin@gmail.com. That said, thank you guys for watching today. Cheers. Hope you have a fantastic weekend and a great 4th of July. I will see you all on Tuesday. Take care.